Welcome to this guide to personal income taxes in Denmark. In the next few minutes, we will walk through how the Danish tax system works for individuals, what you can expect as an employee or self-employed person, and the key elements you should understand to avoid surprises and make informed financial decisions. Denmark is known for relatively high taxes, but also for a transparent system and strong public services. Understanding the mechanics will help you interpret your payslip, plan ahead, and interact effectively with the Danish tax authority, Skattestyrelsen. Let us start with the basic structure. The Danish personal income tax system is progressive, meaning that the tax rate increases as your income rises. Broadly, your income is composed of 3 layers: personal income, capital income, and share income. Personal income covers salary, bonuses, company benefits, and business profits for the self-employed. Capital income includes interest received and paid, and certain other financial gains or losses. Share income generally includes dividends and capital gains from shares. These categories are taxed differently, and the total outcome for you depends on how each type of income interacts within the system. Most employees experience the system through a combination of withholding tax on their salary and an annual reconciliation. Employers are required to withhold income tax and labor market contributions directly from your pay each month based on the information held in your preliminary income assessment or forskudsoppgørelse. This document estimates your expected annual income, deductions, and other factors, and determines your withholding rate. It is your responsibility to keep it up to date when your circumstances change. For example, if you change jobs, receive a significant salary increase, or move between full-time and part-time work. At the core of Danish taxation is the labor market contribution, known as AM-bidrag, which is a flat 8% of most earned income, including salaries and self-employment profits. This contribution is deducted before other income taxes are calculated and helps finance Social Security and labor market schemes. After deducting the labor market contribution, the remaining amount is subject to several layers of income tax. These layers typically include municipal tax, church tax where applicable, and state tax. Municipal tax rates vary by municipality, but are broadly in the mid-20s as a percentage. Church tax, paid only if you are a member of the Danish National Church, adds an additional small percentage. On top of that, there is a basic state tax that applies to most taxpayers, and a higher, top-bracket state tax that applies once income exceeds a specified threshold. These thresholds and rates are adjusted periodically and should be checked using the latest guidance from Skattestyrelsen or a trusted advisor. Denmark also offers a personal allowance, or personfradrag, which reduces the amount of income on which you pay tax. Everyone who is fully tax liable in Denmark receives this allowance, and it is built into your withholding calculation. In addition to the personal allowance, there are several important deductions and credits that can significantly affect your effective tax rate. For many employees, the most common deductions include interest expenses on loans, union and unemployment insurance contributions, commuting costs in excess of a certain distance, and contributions to certain types of pension schemes. These deductions are typically claimed through your annual tax assessment, the årsopgørelse, which is generated after the end of the calendar year. Reviewing and updating this assessment is essential because it reconciles what you have paid during the year with what you actually owe, resulting in either a refund or an additional payment. For individuals with capital income or share income, the system adds a further layer of complexity. Positive capital income above certain thresholds can increase your overall tax burden, while negative capital income, such as mortgage interest expenses, can reduce it. Share income, which includes dividends and capital gains on shares, is subject to separate progressive tax rates, with a lower rate up to a defined amount and a higher rate above that. Again, these thresholds and rates are adjusted over time, so staying informed is important if you invest in Danish or foreign securities. If you are self-employed or run a side business, you will typically need to make provisional tax payments and keep detailed records of business income and expenses. The Danish system offers different schemes for taxing self-employment income, including the business taxation scheme, which can provide certain advantages around deductions and the timing of taxation. However, the rules are detailed, and many entrepreneurs choose to work with an accountant or tax advisor to ensure compliance and to optimize their structure. Another important dimension is tax residency. If you live in Denmark or stay for an extended period, you may become fully tax liable on your worldwide income. If you are a cross-border commuter or an expatriate, special rules and double taxation treaties may apply, ensuring that you do not pay tax twice on the same income. Denmark has tax treaties with many countries, and how these apply will depend on your specific situation, including the length of your stay, the nature of your work, and whether your employer is Danish or foreign. Always review your residency status and treaty implications when moving to or from Denmark. From an operational perspective, nearly all interaction with the Danish tax system is digital. You access your tax information through the online self-service platform, typically using your NemID or MitID. Here you can review your preliminary income assessment, update your expected income and deductions, and check your annual tax statement. It is advisable to log in at least a few times a year. Once at the beginning, to ensure your forskuddsopgørelse reflects your current reality. Mid-year if there are changes to your income or life situation, and again after the tax year closes to review, and if necessary, correct your årsopgørelse. This proactive approach reduces the risk of large unexpected tax bills or missed refunds. In terms of timelines, the Danish tax year is the calendar year. Employers report salary information on an ongoing basis, and the tax authority typically issues the annual tax statement in the first half of the following year. If you are owed a refund, it is usually paid out automatically to your bank account. If you owe additional tax, there are deadlines and potential interest charges if payment is delayed. Planning ahead, particularly if you anticipate significant bonuses, stock options, or other variable compensation, can help you manage cash flow and avoid last-minute pressure. As you consider your overall financial strategy in Denmark, it is worth remembering that tax is only one part of the equation. The system is designed to fund a wide range of public services, including healthcare, education, childcare, and social security. While rates are higher than in many other countries, those services can also reduce private expenses in areas like insurance, tuition, and medical care. Understanding both sides of this equation will help you interpret your effective net position more holistically, rather than focusing solely on the headline tax rate. To summarize, effective navigation of the Danish personal income tax system rests on a few core practices. First, understand the main components of your taxable income and how they are treated: earned income, capital income, and share income. Second, ensure your preliminary income assessment is accurate, especially when your circumstances change. Third, make full use of legitimate deductions and allowances, including interest, commuting, union fees, and pension contributions. Fourth, review your annual tax statement carefully and correct any discrepancies. And fifth, seek professional advice when dealing with complex issues such as self-employment, significant investments, or international mobility. By taking a structured and informed approach, you can comply confidently with Danish tax rules, minimize avoidable costs, and make clearer decisions about work, savings, and investment while living and working in Denmark.